This is the Stock Trading Reality Podcast, episode 144.
I have an 88% success rate, but my P&L is red.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who 100% underestimated the interest that traders have for real estate, Clay Trader.
You know, I never claimed to be the smartest person, so I don't know why I was so I don't know if shock's the right word, but why I underestimated things so much. But just the interest that people, traders, investors, swing traders, whatever you want to call them, those interested in the financial markets have in the real estate market. And yeah, it's similar, but it's not really similar because there's lots of massive differences. One is, I would argue, a lot riskier, that being real estate. But long story short, I started a vlog on the YouTube channel, and part of the vlog, there are a lot of random videos, but I did some documenting some of my real estate stuff, and the interest was really quite a bit, to the point where now I'm currently working on a real estate course. But yeah, I really underestimated the interest, the correlation that apparently stock traders would have with real estate. And Chezz, I mean, does that shock you, or does that kind of just make sense in your mind? And you can be honest. If I like I said, you know, I'm not the smartest man. So I mean, did I just totally miss the boat on kind of the obviousness of this?
Well, I'll continue to tell you you're the smartest man as long as those mine shares keep coming in the mail.
Yeah.
It's got to be backed up somewhere. I'm sure I'm going to be a mine billionaire at this point. But so I think it's funny you bring that up, because really on paper you shouldn't see any similarities. And for context to listeners, I just went through the process of buying a home, and I don't know how, but there's market dynamics involved in it. There's I'm looking at things like, how big is the spread here between what we're offering and what they're trying to do, and like how we're going to land where we're going to land. And I don't know, to me, like, that came naturally from knowing what I know about trading, but I guess it shouldn't surprise me as much as it does. But I mean, somebody looking from the outside, if they were not a trader, would be like, yeah, these things have no things in common at all. But I mean, it interests me. That's actually how, after my grandparents got here from Germany, that's how they kind of built up what we have today. And for my parents, everything was through literally real estate and rentals and just stuff like that. So I've always been interested in it, but I'm actually not that surprised, just because I went through a process of buying myself. So that's the only reason why I'm not surprised.
Yeah, that makes really good sense. And the more I reflect on it, it's like, yeah, I can see why there would be so much interest, because at the end of the day, it's all numbers. It's a big challenge, but the big difference, and I think that in my mind, this is why I always just assumed, is the risk levels are so much larger in real estate. Well, I mean, when to get into the game, you need, depending on your place in the country, hundreds of thousands of dollars to get involved. Whereas with trading, you're like, yeah, I can open up an account for like $500. So I mean, it's
and at the same time, though, if you set your stop loss in trading, you can risk as little or as much as you want. Setting a stop loss in real estate, you might be sitting on something for years and years and years if you overpay. So yeah, I would say the risk is drastically greater, and I think it's awesome that you're going to kind of show people how to kind of not make mistakes in advance, because that's where most of the mistakes happen.
And I think that's going to be, so we're just a little business brainstorming session. Pretty sure that's going to be my approach, because that was my mindset going into the course. It's definitely not going to be, take my course and you'll be a millionaire, real estate mogul. It's going to be, take my course and learn how to protect yourself, learn about how to go things properly, because oops in real estate are literally they can be life-changing if you're stupid about it. And oops in trading is like, oh man, I just blew up a $500 account. Oops. All right, well, here you go, landlord, here's my rent, here are kids, here's the food. But an oops in real estate, that can hurt. That can literally change kind of the landscape of finances. So that's definitely
you can't call Chase your credit card thing and say, "Oh, I didn't mean to actually buy this home. I promise you signed on the dotted line. You're taking that home whether you want it or not now."
Exactly. So that's why my approach is going to be, what I'll teach can lead to success, of course, but it's going to be definitely based around planning, how to approach it all, how to structure plans and such in a way that's going to make sure all the numbers and it's going to be geared towards protection and being wise. There we go. That's the best way to put it. So no fancy do this and you'll be, drinking from your penthouse in New York City. It's just be smart about it. Plan properly, and I'll just leave it at that. So, this is see, Chezz and I were talking all up about real estate. So we just proved that I'm a moron, and I for not realizing this. But today we are talking with a very unique. Well, he's not unique. It's Alex. He was on episode 17 as we discussed right away. But one where Chezz commended him, I commended him. Super, super brutally honest with his trading. He is still struggling. So it was a discussion at first, and then I feel like it really turned into another live coaching call, which we've had before. And Chezz and I were just bouncing ideas off of him, off of each other. He's giving us feedback. So if you kind of like the past podcast where it's been kind of like you are a fly on the wall looking in on a live coaching call, that's definitely kind of the feel this one has. So if that's your cup of tea, then grab a crumpet, right? Is that what it is? Tea and crumpets? Is that what the English drink or eat, Chezz?
Yeah, I'm sure Hooch is going to make fun of you because he's got that British background. But yes, tea and crumpets, I'm pretty sure you got it.
So if that's your cup of tea, grab a crumpet. You're going to really enjoy this. So let's get to hearing from Alex. Alex, welcome back to the show.
Thank you. I appreciate being summoned back.
It's great to have you. And this is actually take two. We had my mic screwed up. But I did not realize, as I was telling you the first go-around, that I knew you were early, but I didn't realize that you were one of the first 20 guests that we ever had on the show. You were on episode 17, and that is literally, I'm trying to do the math here. This is episode 144. So
a long time.
A long time, yeah. I mean, is it 2 years? I'm trying to do the math. So there's
probably
52 weeks in a year. Yeah. So over 2 years ago since Alex was here. But now he is back, so it's great to be here. I met and hung out with Alex, or it's great to have you here, but it's also great to be here with you. But I met and hung out with you, Alex, in Nashville at one of our meet and greets, which I think was the fourth one we did, because fifth one was in Columbus. So yeah, the fourth one you flew up from Florida to hang out with everybody. You helped us eat. Did you have some of that big donut? Did you contribute to us? I thought you did. We got this massive donut in Nashville.
For like
thing
a
was
nickel.
Huge. Yeah, and they gave us a discount because they put like a wrong name. I can't remember why, but they were like, yeah, we're looking to offload it. So, I mean, you can't turn down a good deal. So, but you witnessed, that thing was huge, and you helped us take it down. And that's one of the memories I have of Nashville. So, Alex, I guess in a nutshell, and I fully don't expect you to be able to nail it to a T. So for those of you that listen, if you want to go back to 17 and listen beforehand, that's fine. But don't hold Alex to give you some like picture perfect, because it has been 2 years. But to your best of your knowledge and memory ability, summarize kind of where you were the last time we talked, how you got into the market. So basically episode 17, give us a nutshell version the best you can.
Episode 17. So what I can remember of probably what I was discussing was it was through penny stocks, and I had eventually seen one of your chart analysis videos on YouTube for who knows what ticker on who knows what penny stock, and eventually I was like, well, man, this guy seems to know what he's doing. So let me see what I can like hop on board to the clay trader train, and I joined your chat room. I got robotic trading, mastering level 2, and penny stock survival guide. I'm like, yeah, I'm ready to go. I'm ready to trade. And obviously, well, that didn't work out so well. Right for the first couple months of that, I was like, what is wrong here? I don't understand. Why am I not making money? Eventually, I did drop into I said, that's it. I gotta go all full steam, and I ended up picking up Clay Trader University, or CTU, as we probably will abbreviate quite a bit. And,
what price?
It was at the 1500 level.
Okay, nice. So you got it before I jacked up prices. But I thought you were around for $9.97. You weren't around for $9.97?
I was a $9.97 with a discount candidate kind of guy. But I thought Alex was around there too. I'm kind of surprised.
I was around for the time, but it was the kind of situation where I was like, that's $1,000. I mean, shoot, that's a lot of money.
He was looking for the uptrend to start, Clay,
Yeah.
so that he could set his stop and move along.
Yep. That's what it sounds like.
Yeah.
And now it's $2,000. So at least you just didn't watch the balloon continue to float away.
I've been an advocate to say, hey, you might want to raise that up a little more.
Yeah, it's amazing how everybody that already owns it's like, yeah, Clay, you should keep jacking up those prices. But now that I learn more and more about stuff and how people offer, yeah, you can pay $4,000 and then you get access for 3 months.
And then you take it away from them.
Yeah, I didn't even know that sort of business model existed, let alone people who pay for that stuff. Anyways, but that's a whole nother rabbit hole that we've gone down plenty times before. But so you paid $1,500 for it, and the entire program probably didn't even exist yet. Was RVR trading around then?
It was because RVR trading was included in CTU. The webinars was kind of like an extra kind of bonus thing in my mind, but I was like, all right, I gotta. You gave me the surgeon's dilemma video, and that pretty much broke the camel's back at that point. Like I said, I gotta get RVR, but then wait a second, and I gotta get and I'm like, all right, forget it. I gotta go CTU. There's no reason to stop there.
Gotcha. All right, so that makes sense. You just kind of jumped full bore in, and but yeah, this is crazy to think way back because as long as I can remember the inner circle, you just seem to have been around. But I guess where did that end? When we last spoke with you, episode 17, had you moved into options yet, or were you dabbling? Do you remember at all where exactly kind of you stood within the journey?
I was doing options, but to be quite honest with you, it took me 3 more run-throughs of robotic trading skill sharpening to start truly understanding supports and resistances. And trying to trade options without a true understanding of supports and resistances, let's say it's painful.
Yeah, I could certainly, I would even venture to say that regardless of trading options, just trading in general, if you don't have, there's a lot of foundational stuff in trading that, is kind of well known and is the self-fulfilling prophecy, as we always say, stuff like that. But yes, I can definitely understand why you would definitely see why, that would be problematic. So, well, I guess, correct me if I'm wrong. So options must have been first introduced. Must have been relatively new then. But I know you because you've been in the community for a long time, and I want to kind of see if this is a trend that had reversed or something that you kind of continue doing. The beautiful thing about options for listeners who are unaware is that you can essentially risk as much as you want. You could risk $6, you could risk $60, you could risk $6,000, you could risk whatever you wanted depending on what you kind of buy and sell. When you first got into options, though, after kind of going through robotic trading, skill sharpening a bunch of times, were you still trading those very, very far out of the money, low cost options? That's what I know you did that for a while, but I wasn't sure if you started doing that right from the get-go.
Well, right from the get-go, I started with the low cost ones, absolutely. Then I transitioned to what I'll call the Delta 50s. I was trying to hit everything as close to Delta 50s. It'd be 40 or 60 or somewhere in between. I'd be like, all right, let me see what I think it was Gator or someone else. They were saying, well, it's the equivalent to stock, so it's like, oh, that'd be the equivalent. So I would say, all right, if I got 3 contracts, that's 150 shares, and I could kind of try to trade that because I can scale out of 150 shares. And then I did that for, let's say, a considerable amount of time. After that, it took, I think, or more recently, and I'll say within the last 6 months, I've started to understand how Dave, who our local Canadian, I've looked at how he does it, how he successfully trades options very consistently, and that is starting to make a lot more sense to me.
Now, clarify for listeners, because obviously we interact with Hooch every day in the community, the inner circle, but what do you mean? Are you talking about kind of playing the contrarian side of things? Were what were you doing before that now you're trying to kind of replicate? Because I know you were sticking to the same strategies for a long time. I know you're a buyer of options, you're a seller of options, which we'll probably get to in the story at some point. But what do you mean when you're trying to trade more like Hooch? Because I feel like Hooch is a very, very good contrarian. Is that what you're trying to talk about?
No, it's how Hooch built his trade plans. There's a certain thing that we discussed. He discussed in in several of the webinars that we went through, and it's sort of like, the aspects of how RVR is built. Well, there's one aspect that I had never really considered, and how to handle it is in sort of a swing trading. I don't know how much detail I can go into it without ruining too much.
You can talk pretty freely, because I mean, if people are going to go and try to, bless their hearts if they try to go reverse engineer what Alex is talking about, and
took the words out of my mouth. I was going to say, bless their heart if you even try. Good luck.
Yeah, exactly. So go for it.
Okay.
I mean,
so you know how in RVR there's the three aspects of building a trade plan.
Yep.
Well, one of them is, at least if you're day trading, is constantly moving. You have no choice. But then you've got the other two that essentially the target is what Hooch uses for the strikes. And that helps, and I figured, I was like, oh, well, that makes sense, so that you can technically go out of the money pretty far out, but that's just because you're building the RVR overlaid on the options chain. Does that make sense?
So it just to make sure I understand, within RVR trading and just the components, the ingredients, if you will, that go into a proper trade plan recipe. One of them being target price, of course, and that's one where it's like, oh yeah, I got a target price. That means no, trust me, there's more to things than a target price. But you've pretty much realized that the way Hooch was putting everything together, target price had to do with strike prices and his choice of things. And by using those kind of two commonalities, you pretty much, the light bulb went off for you in terms of, okay, that's how our resident Canadian is building logical trade plans. Is that basically what you're getting at, target price and strike prices?
Correct, because when I was doing the Delta 50s, and then I was trying, well, I'll just do cheaper ones. I wasn't actually building a trade plan using those strikes, because the strikes, with an options chain, you know how a strike is not necessarily an exact price. So you have to kind of sort of overlay the strikes over the possible trade plans before you're even considering to get into the trade.
I gotcha, and I guess what I'm trying to get across is, because the viewers or the listeners, this definitely sounds like Chinese, but that's fine. That's just, I promise options are not, super complicated. Yes, they put in time and effort. This is an ongoing theme that you've heard if you've listened to past episodes. Yeah, this stuff is not as easy as some would portray it to be. But point here that you're making is that upon networking with Hooch more, understanding the strategy, because you do networking within the community and the chat room itself, that your light bulb has started to go off in terms of options and how to build trade plans around them. Is that a fair summary?
Very much so. I am far from saying I'm 100% on that. I would say I'm much less than that. But the understanding of how to improve the success rate, I'm praying that I'm guiding myself in the right direction.
Perfect. All right. So my question that I've been kind of wondering about, because I try my best to track everybody and just keep an eye on what they're doing. But I know for a while you were selling premium, you were doing swing trading, and all those sorts of things. Are you still doing that, or?
Yes.
I guess if not, what? Okay, you are still doing it. When did that exactly start? I mean, I don't need an exact date, but approximately, give or take, episode 17 ends. How much further after that did you eventually start to go into the swing trading and advanced options? Was that I want to say it was probably more than a year after that episode.
Yes, very much so. You released the course slowly.
All right, actually, here we go. Before we go into that, let me cut you off. So my question is, before you even establish, and maybe this will help you establish when that was, what was going on from end of episode 17 to the advanced options? I know you went back through the skill sharpening course several times, but I mean, we're talking about, as you just said, over a year of time. So what exactly was going on with your trading and everything else during that rough-ish year of time?
Well, we'll start by saying that I was trying to do directional options for the longest period of time, and constantly not getting profitable. No, it was not profitable. I was struggling severely. The advanced options course was sort of going out, but I was using a cash account, so I could not I could not perform advanced options trades with a cash account. So I remember
those emails that we exchanged.
Yep. So I eventually I eventually transferred brokers from MB Trading, who still sends me emails today.
You were with them, Chezz, weren't you, for a little bit or no?
Oh, I got more than emails. I got daily confirmations in the mail. Yes, I do. I do remember them.
I have those as well. I don't understand it, but that's besides the point.
It was great bonfire material.
Whatever happened? They got bought by somebody, didn't they?
I don't know how, but yes, they did. They got bought by Trade King, but so at one point in time, they were one of the best brokers for smaller accounts for options rates. I think what were they at, like $1 an option or something, or they were somewhere
something like
close.
that, something dirt cheap.
Yeah, so I had a short stint there, but okay, fine. So you can't actually do any option selling because of cash account, because to do advanced option strategies, you essentially have to short something, and you need margin to do that. So did you do that? Well, I guess you said you left. Did you leave MB completely and then go to what, TDA or something?
Yeah, I went to TD Ameritrade, Thinkorswim, TOS, as some might call it, because I honestly didn't feel like I should have margin with such a low quality broker, and plus I was having so much difficulty with their software. I to the point where I had the personal phone number of some of the developers of their software, trying to figure out how to get their stuff to work.
Well, you got further than I did, because I used to give them grief because it looked like their platform was built in 1995 and then never upgraded. But yes, I would fully agree. It is in your best interest to kind of go to a larger scale shop. And I mean, I think we had dough rates at the time, so you paid a little bit more for option prices, but you were able to short options then, correct?
Yeah, I started. I injected. I took some money, injected to build up back my account a little bit at that point, and I had dough rates on TD Ameritrade, just sort of a fresh and smooth account.
Gotcha. So correct me if I'm wrong here, because a lot of the times we interview people on both sides of the spectrum, people who buy options and people who sell options. Was it appealing to you that you could essentially set up the odds in advance? I guess what reason, I know you said you were struggling directionally day trading options, but what was kind of the straw that broke the camel's back that said, hey, I want to be at like the casino versus, the guy playing blackjack at the table? What kind of pushed you over the edge to even give that a try?
The frustration when I started actually having directional trades, they were going my way with just basic options, calls and puts, that by the end of the day or the next day, all those gains, they're gone. And it's like, well, that's not fun.
And how, I guess, were you, when you say all your gains were gone, are you just talking about your daily gains, or are you like blowing up your accounts?
Theta.
Okay, Theta was eating away at your gains. Okay, so, but it's not like your account was going to zero or getting severely hammered. It sounds like a lot of these were pretty much break-even trades, or were they, when you say your gains went away,
no,
they went to break-even and then into the red?
Yeah, consistently red. Let me put it this way, consistently red. And that's still been my theme even up to today.
Consistently red?
Yes.
With the swing trading too?
With the swing trading too.
Okay, good. So we'll have some good talking points here. So was it you that was just like, I had like 15 red days in a row or 20 red days in a row? Was that you, or am I mixing you up with somebody else?
No, that's probably me or more. I mean, I for a long time I was journaling, and I stopped because I got to the point where finding a green day was painful. I couldn't find one.
Well, I want to jump in here, Clay. So I'm a big advocate of journaling because this is why. Similar to Alex, I have struggled for a very long time trading directionally, but I still decided that it's something I want to do, so I will learn how to do it and won't really accept defeat as an answer. I'll just lose less money than anything else. So here's what I want to ask you, because for me, journaling was very, very eye-opening, and especially kind of being a stats-driven guy, I upload my trades and it gives me stats on them and stuff like that. I was able to pinpoint areas where I, regularly lost money and started to reduce those so that I could kind of clip out the losers as much as I could. You're still going to have losers even on the best setup in the world, but then kind of maximize and push more on things that were working for me. So are you telling me that after, I guess, how long did you journal for? That's the first question I should be asking here.
Well, I just linked in our little chat here my current journal, but the other journal I did about 9 months.
Okay, sorry. I was muted and actually looking at the journal there. So, okay, now here's a question for you. Are you ever writing down, so in the journal for you guys, because obviously you can't see it right now, do you have a notes section, anything like that, where you're actually talking to yourself almost so that you can look back on it? Or was this just a stats-driven journal?
I have one of those as well. I will gladly share that with you for entertainment purposes.
Okay. So, because the only thing I just want to find out is, here's the thing about journals, and this is good advice for anybody who is going to get into trading and kind of utilize journaling and stuff like that. If you don't take the time to look back over it, and for me, I look back over it on Sundays. I review the entire week. I look at not only the trade stats, but I look at what was going on in my life. For example, today I had a mediocre day, which was just kind of blown out of the water because somebody broke into my wife's car. So that's a thing that happened, and granted, I stopped trading after that. If I would have kept trading, it would be very easy for me to say, well, I probably shouldn't have done that because I was upset about this and stuff like that. So if you're not going to review your journal, the journal doesn't help to do too much. So please tell me, Alex, that you did review your journal at some point.
Every day when I would get home, I would go back and review, and then at the end of the week, I would also go back and review for the week.
Okay. This is good, because here's the thing. You're building great habits with that. But you got to tell me this, with strings of losers like that, you really couldn't find like one thing that was, you were making impulsive entries or anything like that. Nothing kind of stuck out in all those days of journaling.
No, at least not to me. I am the first person to admit that I've done things wrong. The problem is I just don't know what. So it's sort of like, all right, keep trying until something works, right?
I'm also looking at your journal right now, so I'm trying to understand the one with the images. So I see one commentary: hindsight, probably jumped the gun too quick. Entry on 15. Yeah, nothing like going through a. So
is live trade support.
Yeah, it is. I'm curious what happened after some of these, because I see here you got a dead cat bounce and a super bear river, then you have a wolf, and the next candle is red. So I guess I don't know. I'm trying to figure out what was the results of that trade.
Well, that's the entertaining part of how I did the journal. That journal you're looking at, I had one screenshot right at entry point, and then right below it, usually I would do a follow-up of what the trade was.
Right. When you stopped out or
Correct.
if you hit target.
Right.
Correct. Yep.
Like
okay.
the more recent ones at the top are kind of the point where I said, you know what, I'm done with journaling. I can't anymore because it's not making. There's obviously no progress being made here.
Gotcha.
Yeah, sorry, Chezz. I'm just scrolling.
Oh no, you're fine. I don't know if you could hear it on my microphone too. I'm just scrolling through the thing too. But okay. So I guess we can move beyond this, because obviously, Alex, the thing here I want people to understand is that you're not kind of giving up. While you might have given up on journaling, you can't say that you didn't try, because honestly, I'm looking at, pretty much it looks like over almost a year's worth of journaling from like 2015. It's more than a year, absolutely more than a year. So no one can say that you didn't try journaling, but I guess, that's tough, Clay. I don't know what else to say, because for me personally.
I don't see any rational why you did what you. Okay, there's. But I think to Chezz's point, he's mapping out psychology. I don't see any psychology in your notes. There's something going on in your mind that's causing you to.
We're gonna take this down the rabbit hole here, and we're gonna spin off of trading here just shortly. I know Clay and I have done relationship podcasts. No, we really haven't, but for some of the intros, we've done some funny stuff. Alex, in your personal life, and this is going to be you just got to be honest with me, because I'll be honest with you about mine. Are you a very confident person? Are you an introvert? Are you quiet? Do you have trouble believing in yourself? Give me a broad consensus of how you view yourself, and then I'll kind of lay into mine.
100%, I'm an introvert. There's no question about it. But I'm also very confident in my skills, in how I sort of. I'm looking for the word, but
your work ethic,
my work ethic,
your approach.
My work ethic is very important to me. I feel that I must do the best that I possibly can at all times.
And I know this also because, like I said, Alex and I have been community members for years at this point, and Alex is like the guy where, okay, guys, I'll see you later. I'm going off to my second job. Like, Alex will go do the work and, like, doesn't really complain about it. And granted, if he's had a long day, he'll say he had a long day, but he doesn't sit in here and cry about kind of life and whatever's going on. But this is what I want to bring up right now, because strong work ethics are great. And in everything else we're kind of taught in life, the harder you work, the more you're generally rewarded. Now, the thing about trading is that trading isn't if you do X, you get Y, and if you do more of X, you get more of Y. Trading is this thing where we literally have no idea what's next, and we got to play the numbers game. And me, it's kind of funny because I thought I would get a different answer out of this. I was never a very confident person just in life in general. I always thought people do better than me, and I got bad strings of luck and blah, 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 and it's all in my head. Everyone's different in that regard. I thought you would fall closer to that in my camp, because that's kind of been the most limiting thing for me, is I never believe that I'm going to do anything right, so half the time I do nothing, or when I do stuff, I make sure that I do it wrong, almost like a self-sabotage. So you don't have that problem. But I want to say that, correct me if I'm wrong, when you take a string of losers, and I don't think anyone is strong enough to take a string of 15 red days in a row, you can't tell me that your confidence isn't shaken and you're questioning if you know what you're doing.
Let me say it this way, that originally the answer would be yes, I would question myself. But I look around to the other people in the community and say, well, look, they're doing effectively the same thing that I'm doing. Maybe, at least from my interpretation, from the course material, from everything else, and they are successful. It's just a matter of time before I transition from the left of the frustrated man chart to the right of the frustrated man chart.
So go ahead, Chezz, sorry.
Well, I was just going to say, so here's the thing. Normally, if you keep doing the same thing over and over again, you're always going to get the same results. What I want Clay to weigh in here is that Alex he hasn't just style jumped from here to there and whatever. He sold premium for a long time. He did directional options for a long time. So he has changed what he's done, but there's still got to be some overarching issue that is causing him to struggle with trading. And first off, I want to commend you for just being honest with us, because it's very, very hard and difficult. When my family asks me, how's your trading going, and I've had a rough month, I'm more tempted to lie than just tell them, oh, it's been a crappy month and I really hate trading right now, but it's just how it goes. So thank you for being honest with us. But Clay, would you agree with that? It's not that he's style jumped, but there's still got to be something overarching that is kind of limiting his progress. I don't know what else.
Yeah, no, I will also piggyback on the commending you for your honesty, because you could have come on here and talk like everything was rainbows and butterflies and sweet little old ladies and motorized carts. But so I do commend you for your honesty. And there's something going on, because I'm pretty sure the person that was like, yeah, I've had, like, I don't know, it was some crazy number of red days in a row, or like red trades in a row. And I don't know how that's possible to have that many red days in a row. I mean, you could guess, and you should be able to have at least some green days. So I still chalk it up to you overthinking things. That's always been my premise with you, and it's gotta still be because you can identify a chart pattern. You can, there's no doubt about that. You can, I've used your scans before in the weekend newsletter on chart setup, so that's not the case. You know how to identify things, but there's something going on with identification. We'll try to reverse engineer it. Identification, understanding of charts, no problem. So that leaves us with managing the trade or exiting the trade. So I mean, and managing, including entry points. So are you mainly getting stopped out like right away on these things, or what exactly, how long are you in a trade for typically?
Up to the point where it was Trade Talk 65, with Webinar 65, you honestly called me a greedy pig, and I had to have a heart to heart with myself, realizing, yep, I am a greedy pig. I realize that.
Explain why for listeners.
Why did I call you a greedy? I
know exactly why.
Okay, I honestly have forgotten it, but okay.
I know why.
Okay.
Alex, do you know why?
Very much so. It was
All right, tell the listeners.
It was a Netflix trade. And in this webinar, we were building a trade plan on a Netflix trade, irrelevant of anything. And I was literally the only one stopped out before everyone else because I was, quote, a greedy pig with my trade plan stop. And I don't know, it probably from wherever the trade entered, it was $3, $4, $5, $6 above by the end of the trade when I literally lost, I don't know, 25 cents?
10 cents.
Something like that.
If that. 25 cents for you is a large stop loss. I've been going in on Alex for a long time on this, so I'm glad he remembers, and that's good that he retained that.
So I called you a greedy pig because you were so freaking tight on your stop loss?
Yes.
Is that why?
Yep.
Okay. So greedy in the sense of account protectionism, which we talked about with Remy on his Welcome Back episode, I think. Yeah, account. Do you remember, Chezz?
Pretty positive. I think that's when we kind of coined that whole
there
thing
we
and
go.
talked about it.
So
yeah, same idea.
Is that what you're still doing? Are you?
No.
All right, here we go.
No,
you're not doing that.
Because after that was when I started redoing robotic trade skill sharpening again. It's like, well, okay, let me actually look at what price action is doing. And that's where you started seeing me at least starting to actually draw in detail. And that's where this journal that you're looking at came into play, where I started saying, all right, these are my trade plans. I can't lie to myself if I'm drawing my trade plans, taking screenshots of them and saving them, because there's no questions there. It's all very much painted out there for myself.
No, I will agree. The journal that I'm looking at is very thorough with images and all that sort of stuff. So you're definitely not exaggerating there. Now I feel like, because now this is all, that's funny you bring that, because a few webinars ago, you were talking about some stop loss and it was way up in no man's
ASMA.
land.
That's what I
So now my guess is, are some of these trades you're in the green and then they ultimately turn against you? That would be my guess. Is that what's going on now?
Yeah, I'll give you an example. I had a swing trade wherein I did a hooch style swing trade, and ironically he happened to do one the same exact. This was an Apple calls kind of trade, and Apple in the last couple of days was rallying, and then I was actually my out of the money calls got to the point of in the money, and then there was a, let's see, what's the date? If you're pulling up Apple and you're looking at the chart, you'll see October 18th. So I wrote it up from probably October 4th all the way to October 18th.
18th, October
4th. It's a nice move on the daily.
Yep, on the daily.
October 4th. Let me find the 4th.
It's
that's a nice
worth
move.
Couple bucks.
Yep, that's a nice move. Yep.
4th, I bought the 160 calls. At that point, I had a couple days left on everything, and I was just in the money. And I'm like, all right, well, I'll put my stop underneath the daily candle because it's red. And if you look at the next day, look what happened.
But here's the thing. So tell me how you feel right now. The market gapped down against you. What do you feel?
Annoyed.
That wiped away all the profits, isn't it?
Very much annoyed.
But you don't. Well, I guess I don't want to put words in your mouth. Was the market out to get you?
No. I made the decision. Every single one of my trades is 100% my own responsibility. There's no market against me. No, the market's not out to get me. No one told me to get into a trade or get out of a trade. I chose the ticker. I chose the setup. I made all the decisions 100%.
All right, let me ask this. Now it's starting to dawn on me. You are one of these I'm letting it all ride people, right? I don't mitigate.
Correct.
That's one of your, yeah. Well, there you go.
Oh,
there you go.
I could save so much on mitigation, man.
Yeah. So why? Why do you not want to mitigate?
Well,
because I mean, on that is why. Especially now, I do get it.
I don't have an answer.
I'm not going to mitigate. But I think what I'm sensing here is little apples and oranges. When you are day trading, scalping, yeah, you can just let it go, whatever. Because stocks just don't gap in the middle of the day. If you're doing swing trading type stuff, you are at risk, even with options, of gaps and all sort of stuff like that. So, is it maybe are you? And again, I'm not going to sit here and say that you cannot not mitigate if you're doing swing trading. But I mean, to me, my personal risk tolerance level, knowing the threat of gaps, why would you not mitigate? Especially, so I don't know.
To give you perspective, at least on that trade, I only had 2 contracts. So I was considering that
in my mind,
would
I hear mitigate one.
Hang on. I got to jump in here too. Okay, so you have 2. So I get it. Okay. So with 3, I understand. And spoiler alert for you who don't understand and want to reverse engineer this. Good luck. With 3, you can always, in my opinion, I try to do things in thirds as well. One's for mitigation, one's for target, and one's to run if it wants to run, and I just trail, and that's how I do it. No specifics, but that's how I do it. Okay, so you have 2. So in my mind, this is where I want you to answer a question. On that swing trade you took on the daily with a 160 strike, which eventually got as high as it looks like 161, what was your target on it? Was it 160?
160.
Was it your break even? Okay, so in theory, you should have taken off one at target. In theory.
No, he should have.
So
he should have.
Yeah.
I mean, it literally hit
bought the 160.
It literally hit your target. So why would you not? It literally hit your target. So I think we're making progress.
Love,
I think we're making progress here. I think that how many times? Let me ask this: do things hit your target often, or is this like one of the rare instances where it hit a target or got close to a target?
I gave you this as sort of an example of of annoying, frustrating kind of trade. Because this was a rare occasion, at least for me, that it actually hit the target within the time frame. Because, as you know, contracts decay. And other times it doesn't even hit the target, but that's a different story.
Does it get at least 1 hour of what you're willing to risk? I mean, does it go in your favor at all?
Mitigation.
Does it go in your favor at all?
I wish I had better statistics on that. The answer is not so much.
So okay, I'm glad. Okay, so here's something else that you can improve on: is what is going on after I get in? Is there, within the next few hours, does it go in my favor at all, or as soon as I get in, does it just like go sideways and then drop the opposite direction on me? Well, if that's the case, then you are chasing. Your entry points is the problem. But if it does actually, now not every single time because it's not always, but if there is some sort of data that's showing you, yeah, it does actually go in my direction for a little bit of time, then I would say that what you need to be focusing on is not an entry point problem, but more of a managing problem. So, I mean, I guess, but you don't have that data. So maybe potentially think about journaling again, but now be focused more so on what actually happens after the trade occurs. I know you have a bunch of screenshots, but I mean, and I don't expect it'd be hard to remember. Well, what actually did happen within the first 3 hours or the first X amount of time after getting in? But I know you were going to say something, but what were you going to say?
I'll just give you a little bit of information that for these kinds of swing trades, that at least for option swing trades, I actually wait till almost nearly the end of the day to try and get into it, depending on the daily candle, because unless it's going to a support that I know is, well, you never know, but unless it's going towards a support, I don't I'm not going to be trying to get it in on it immediately unless I get an idea that, hey, is this just going to keep falling apart on me, or I'm waiting, because by the end of the day, I'll have a general idea what this daily candle is looking like, and then I can make a decision based on that.
Hey, I'm with you, man, because that's exactly how I swing trade Forex. I keep it robotic trading simple, RVR trading simple, and I make decisions at the daily close. That's how I do it. That's how I've always done it, and I just kind of keep it small, and I got a pretty okay hit rate on it. But I was scrolling through it. For context for listeners out here, Alex sent us a 727-page journal, okay? And I made it to page 412. I think I was just kind of shooting in the dark, but I found one. This is one of Alex's old habits. On a $116 Facebook stock, Alex's stop loss was 4 cents. On a $116 stock, and I tell you, because he used to bring this stuff up in the chat, and I know you listened, and you eventually kind of widened it out a little bit, but I'm a big advocate of small risk and large gains, but that's just too tight, man. The spread sometimes on some of these names can be 4 cents wide. So this is just an example of old Alex and why we called him greedy. When people think greedy, they're like, oh, he just must, hang on to his losers and, or just like really looking for home runners. No, Alex was the biggest account protectionism person. He'd be the CEO of account protectionism. But I know we just went in on you on that webinar, and I do remember it very vividly because I'm glad we did. Now, so I guess I didn't really get it. Did you widen your stops out a little bit or change time frames or something like that? Because I know we just went from kind of the daily stuff to the intraday journal. But did that have any lasting effects, or are you still keeping your stuff really, really tight in terms of stopping out all the time?
No, I usually one of the problems is I was trying to. I was only looking at maybe 5 or 10 candles. I know I need to look much more than just those few 5 or 10 candles backwards to see, hey, is this truly a support? Is this truly a resistance? So I can make a much better decision on where the stop should be placed. So yeah, I guess going to a higher time frame would be the sort of better way to put it. And even then, sometimes when I hop to a higher time frame, it's like, hey, look at that. That's a wolf. That better not be a long play.
Okay. So I got to bring you back, though, to kind of when you were talking about daily closes there, because I know I spun you around, but that's just because I found the perfect example in this 700-page document. So did you find more or less success or similar rate of, hit rate, how often you were winning and losing using the daily candles, using the daily closes, and that type of swing trading? Because I wasn't actually sure I didn't even know you were doing that. I thought you were just selling option premium. That was your swing trading. But this sounds different to me.
Well, I've been trying to see if, once again, I go back to sort of, I look at Hooch and I actually have never met him because he wasn't at the meetup. But we've talked enough, and I've understood that his style of trading is very, very similar to what my desired style of trading is. I really don't. I've never truly seen his trade plans other than those on the webinars and everything else. But I realize that this is the kind of person I want to be. He's successful, and he seems to have the same risk profile. Because he doesn't fade, he doesn't do he doesn't do anything way too complicated, and heck, Clay, even at Nashville, made fun of me for having such complicated things on my charts. I've stripped down my charts to pretty much almost nothing. So I've said, all right.
Did I make fun of you, or did I just maybe give you a hard time? I don't remember. I don't really make fun of people. I mean,
Clay's abusive at meetups for those who are unfamiliar.
Very abusive. So abusive, I'm going to the next meetup.
Yeah, exactly. I show up with soap in a sock, and I just start wailing on people with it. It's you will leave with bruises. So here's kind of just listening in. How about Alex does Alex? I mean, I get it. That's huge. I picture it. That's what I want to trade like. Well, I want to trade from a yacht out in the middle of the ocean for 10 minutes a day, but that doesn't necessarily mean that that's right for me. I mean,
I'm referring to sort of the style and because
the style, whatever you want to call it. I mean,
regardless,
because I can't you
got to be
Wilson,
Alex. You got to figure out what works for you. Like you got to, and I realized, okay, maybe what Hooch. So I don't know. Maybe you're not necessarily shiny object chasing, but
I gotta jump in here because this is Alex is me like 2 years ago, or we've watched Hooch go from literally a 50-50 trader to we talk about this like offline before too, Clay, that RVR like changed his long-term trajectory in trading. And my wife knows who Hooch is because I'm like, this dude's like my idol. Like, I want to do exactly what he does. He just logs in and kind of kills it. And Clay, don't get me wrong, your strategy works exactly for you, but like mentally, I just can't do it. So that's why I just don't do it. I'm not going to force something that's not going to work for me. But like, here's the thing. At some point, I tried to trade like Hooch. Actually, right when I kind of got a cash account, was trying to trade like Hooch. But for me, I just couldn't. Hooch can look at 8 charts of the same ticker, and his brain can put together his trade plan based on one thing that he sees on that. To me, it's too much. It's overwhelming. I can't process it as fast as Hooch can, and that's why it works for Hooch, but it doesn't work for me. So while I admire Hooch, and I think he's an absolutely stellar example of what is possible with kind of education, because Hooch was break-even at best for a long time, and he really kind of turned it around. To me, that's inspiring, but I couldn't actually mimic Hooch, and I had to recognize that I have to find where my brain naturally gravitates. That's why I still try to trade breakouts. That's where I naturally go. The thing is, how can I reduce my risk and increase my hit rate? Still doing that. My brain just naturally takes me there. Doesn't mean I was ever good at it, but I can figure out how to still. It doesn't provide me any discomfort. So I think what Clay is trying to say is that you have to find what doesn't provide you any discomfort, what you naturally see, and kind of push that edge. Am I kind of jumping in here, Clay? I know I just ran you over.
No, that was good. But I think what I want you to do is this, and you're not going to like it. I want you to journal, but you got to journal with different data points. I want to know, you can set up columns in your spreadsheet, but the first column in your spreadsheet is what happens within an hour of the trade. What happens within 3 hours of the trade? Because that's going to tell you what the issue is. If it's, I'm getting stopped out 80% of the time, your stops are way too tight. Or you have terrible entry points. If you are, hey, look, it actually went in my favor for a little bit before it, went against you or whatever, then you know what? It's not entry points. You're getting good entry points. You're getting, your stop losses are pretty good because you're not getting stopped out before they make on these, we'll just call them type moves, but at least they're going in your favor. At that point, it's got to be some sort of management issue that's still causing you all these headaches because it went in your favor. You didn't get stopped out before it went in your favor, yet somehow you're still taking losses. So that's more of the manage end of the spectrum. But you got to figure out what is going on within some sort of time frame of after you enter, because right now you don't know any of that data, and that's how you go ahead.
Oh, I'll give you some more entertainment. Because this all we've been discussing is all directional stuff. We haven't even touched on my advanced stuff, which is also entertaining.
Well, I didn't forget to pull those up, but yeah. Touch on Clay's point first. You can't walk away.
I'm taking notes.
Okay, good.
I'm taking notes.
But does that make sense to you on why? Sense? Because I know you can read a chart. It's not. I have a big old Sharpie red marker that I just crossed out and said chart vision ability. Chart vision is not it. It's got to be something about either your entry points are not so good, or your stop losses are too tight, or it's a management. And you have to figure out what is going on after the trade takes place within the near term. Because if it's all of a sudden just down it goes, all right, well, there's some issues there. But like that Apple, for example, that would be totally a trade management issue. But as you said, it's not like every single one does that. Sometimes they don't hit your target. But just because they don't hit your target, even if they go up to 1 hour, 1.5 hour, that's still enough opportunity for you to potentially mitigate and then start getting more aggressive with your stop loss. And at that point in time, those red days are going by because those are turning into green trades. Maybe not massively green, but things are going in your favor. So I would definitely start to document what's going on in 2 stages. Like an hour. And it really depends for you listeners out there. Maybe you want to do something. If you are a day trader, then yeah, I would want to know what's going on within the first 10 minutes after you buy. Now, what's it at in the next hour? But for Alex, that's why I'm talking about more so different hours, because he's doing more of this from the long term. So I would say to start there, and I think that could start to narrowed on some issues. But yeah, the swing trading here with advanced options, looking at the time, we still got a little bit of time. But I see here, I thought you were doing well with that. I thought you were just...
I have an 88% success rate.
But, hit the asterisk.
But, I was giving the dramatic pause, but my P&L is red.
What are you doing, playing earnings or something, or what?
None of the above. I've stayed specifically away from earnings because the gambulation of earnings is not in my stomach.
So are you just rolling your way into poverty, or how is this possible if you're not playing earnings and getting blown out of the water?
That's what I'm working on. I've got this journal to detail. I literally on my journal, Mr. B, I shout out to him. And I don't think he's done a podcast, so
we're working on a welcome. No, he's done a podcast, and now
he's done a podcast. It's not a welcome back.
Anyway, he encouraged me to restart the journal, but this time for advanced options, and I'm doing purely credit trades, 100% of them. In the first trade I have journaled here is on August 10th. And since then to today, I've done 45 trades. 40 have been winners and 5 have been losers. And those 5 have been doozies. And I'm still holding them because I have no choice.
Did you mention how many trades total? Or
45.
Just the time frame? 45. Clay, okay, so for listeners out there, because I know this, like, we're talking like you understand all of this stuff. For context, these are swing trades that are longer term, and there's a lot of different kind of stuff you can do with advanced options. Very, very customizable in that sense. Clay, do you personally believe 45 trades is enough of a data set? I just want to hear your honest opinion here.
45. I'm an engineering major, not a statistics major, but for small and often, I think that most people that would do small and often, I don't know if 45 quite qualifies as often enough.
I fall in the 100 camp.
I was going to say 100, but that just may be because it's a grandma number, so I don't know if there's any mathematical validity behind that. That's just my mind and grandma. For you listener, or for you C2 members, you know what I mean by grandma and just the way it works. But yeah, I would be up in probably the triple digit way. However, because not that long ago we had Cubs welcome back, and Cubs absolutely killing it, doing the exact same, not the exact same thing, but he's using the overall advanced options, swing trading, and here's Cubs doing very well. And this just really summarizes, which again, Alex, I do appreciate your honesty, because here we talk to Cubs, he's absolutely killing it, and then Alex is still struggling, 40 wins, 5 losses, and they're all gone. So it really just goes to show that there's a lot of psychology, there's a lot of... Because you talked to Cubs quite a bit too, right, Alex, in the chat room?
There's a couple tickers that I have. I actually have one ticker that he and I both, we sort of, let's say, tag team on. That I don't know what he does on it, but I have 100% success rate on it, and he does too. And it's sort of we've learned to trade that, but the trade occurrences on that are so low, you kind of have to find other places to make your farm.
Now, I want to bring this up because I actually did bring this up on his on Chris's podcast, on Cubs' podcast. How many of these... so out of the 5 losers, how long did you actively defend them?
Well, I'm still defending them now, to this day.
Okay, so these aren't the ones you sent me in the email.
Yes, they are.
They are. Okay, so because they have close dates on
right,
them. Some
I had
of them
to close
you were
them
in for 3 days.
because I had to roll them after.
Okay.
After they became, let's say, untenable.
Sure. Okay, so with that being said then, have you seen any recovery from the screenshot you sent me on the 5 losers since you have rolled them?
I'm looking at them right now. Home Depot is up $7 today, still down 30.
But it had a $5 pullback almost. So that's what I'm trying to wonder. There was some opportunity there. I'm sure you didn't collect enough premium, though, or unless you nailed the top or anything like that. But here's what I want to kind of hammer at. If you stick with these and do kind of the defense stuff that you're supposed to do, it is annoying. I promise you it's annoying. And we didn't air Cubs' podcast yet, so you wouldn't hear me say it yet, but I'll say it here to you again. Every single one of my big losing trades that wasn't earning related or any binary event type nonsense, that was just a strictly trade plan, the minute I decide to stop rolling it and I'm done with it, the next cycle is always the one that would have paid for the entire thing. So I brought this up to Chris because we talked about some of his trades where he's just been in it for like 9 months. Correct me if I'm wrong. It looks like the earliest one was like the end of August, right? Somewhere around there.
Well, that's the one I started journaling, yes.
Gotcha. Okay. So I guess I don't know how better to say it is that while your account is red right now, it might not be by the end of the year.
Yeah.
That's all I'm going to say.
And just, real quick, point one. For you listeners, Cubs podcast has aired. Chezz just meant that as far as Alex's frame of reference, it hasn't aired yet. But yeah, that does exist. Second point, it's for you to say that you've had 45 trades, 40 have been winners, and 5 have been losers. Again, both of you, correct me if I'm wrong, those 5 are still in motion right now, correct? Correct. Or am I misunderstanding?
Correct. I just kind of have to...
Well, no, there's no... You kind of... That you are misleading, Alex. You not only, I'm not saying intentionally, but you're misleading yourself. You're sitting here saying, wah, wah. I have 45 trades, 40 of them are wins, 5 are losers. No, they're not losers. You just said the thing's still open and working. Maybe say it like this in your mind. I have 40 winners and 5 really annoying ones right now.
Fair enough.
Because psychologically, it's like you're already admitting defeat. So I can see that leading eventually to you just bailing to Chezz's point of, you know what? Screw it. I'm done with all the rolling. I'm done with being mechanical because they're already losing trades anyways. Because you're already, think about it. The way you presented it to us in your mind, you just revealed that they're losing trades. So it's going to be that much more mechanical, or it's going to be that much more difficult to be mechanical if your frame of reference point, which you just admitted, is it's a losing trade. Now, props to you for not doing that, and for they're all 5 of them are still open. So you're definitely
you're doing better than me.
Yeah,
you're doing better than me on that.
But I guess my point is that you have 40 winners, 5 annoyances right now. Because
to give you a quick disclaimer, I'm just checking right now. Actually, 2 of them I do not have open currently. I bailed on them because whatever reason.
I don't like that whatever reason. Clay.
What did you say about journaling? There you go. There's a prime example of maybe fair. Maybe did you journal those? But whatever reason, that's okay. So what was the reason?
It's an emotional decision. It's an emotional decision unless you give me a technical reason why you stopped defending.
Because I could give you a very technical reason. NVIDIA. I was short call spreads twice. And my call spreads are now $50 underwater of where they would have been.
And fair enough. That's just one of the ones I will actually give Alex that. Now here's the thing though. You could technically, in theory, keep collecting credit that does eventually cover the spread. But yes, that's been one that has not been very fun to call premium sellers. I will give you that. However, I'm not going to let you off the hook because I'm telling you, once you collect the width of the spread, and I know it's hard to do because you're so far away at this point, you could have recovered it. But, Clay, I'm actually going to give him a hall pass on that one.
No, I disagree with both of you. I disagree with both. Yeah,
fine.
No, what does the mechanical system say? Did you break the rules of the mechanical system? If yes, then all of a sudden you're like, well, this one's going to be the next NVIDIA. This one's going to... And then 99% of them are not going to be the next NVIDIA.
That's true.
So you are just you are making this out of pure hindsight, and I'm not yet. This is passion. And for those of you that CTU members, they know I like to raise my voice. It's not because I'm mad. It's just because I want Alex to succeed. But no hall pass. You broke your rules of the system, and yeah, maybe... But Chezz just said, and do you agree with Chezz, that although it might be massively annoying right now, that the overall system, the mechanics of the system that you are supposedly following could still work out? I'm not saying that won't be annoying, but it could still work out.
Yes.
Okay.
You're correct, Clay.
Okay. So therefore, you broke the system for no good reason. Yeah, I get it. NVIDIA, it's a monster, but I'm telling you, and I'm speaking from experience here. you have some sort of, for me, a bad fade player, and you're just like, oh, great, well, the next one's going to be this. And it's like, what are you talking about? The odds of that happening are like slim to none. Sure, they happen. Sure, you're going to take losses on them, but that doesn't mean like that's the norm. And that's the recency effect, right, Chezz, in a sense?
Absolutely. And Alex, I know you focus on mindful stuff too. So yes, you are well familiar with recency effect.
But for listeners out there,
I hear Hooch has a course on recency effect for profit.
Yeah, there you go. But
yes.
So I guess I mean, you bailed on the system. You're not giving the system enough time to play out. And part of the system is annoyance, correct, Chezz? Like when you're doing mechanical stuff with swing trading and options, it's not going to be rosy and butterflies all the time. You will be annoyed.
No, you will have those NVIDIAs, those Fitbits as Cubs had, those ones that just never seem to go your direction. But the thing is that the one time they do go your direction, it is paid for it and made that entire wait worth it. And it goes into like kind of your time value, money, stuff like that. But it's absolutely possible to recover that. And Alex, correct me if I'm wrong, you were spread out on that, right? There's no way you were naked calls on that stock.
No way.
Okay. Yeah. You could. You know what? I'll actually share the dunce cap with Alex for that because I tried to give him a hall pass. So I guess that's why you're the principal, Clay, and I'm just a substitute teacher. It's true though.
I've had my years of experience. I know how the voices work, and I get it. You can just say one word, NVIDIA. Well, yeah. Well, now every time you're going to be using one word NVIDIA, one word this, the next NVIDIA. No, it's not going to be the next NVIDIA. Could it be? Yeah. It's like a 1% chance, but you get the point. So, Alex, I think looking at the time, we're going to start to wrap things up, but let's do a little checklist here. Chezz, chime in if I've left anything off. You're going to work on your journaling. And we already identified your journal of, for whatever, NVIDIA. No, you just jumped the gun. You got emotional because that was not a technical reason. So like Chezz said, you got to work on your emotions still. We want to work on your journaling, start to document so we can figure out what's going on. Is it stop losses? Is it entry points? Is it managing? And you just got to trust the system as far as, your mechanical stuff because it sounds like you'd be annoyed on NVIDIA, but...
And to clarify, Clay, would you recommend that he does this kind of... So I love that journaling idea you had, essentially. Pick your entry, write it down, set your stop, set your target, and then watch what happens over a set of trades. You'd probably recommend he does it on paper, right?
Oh, yeah. All this should be on paper. Just
Don't throw a bunch of money at just entries and then winging it. Oh, crap, I lost 90 out of 100 trades. Don't do that. We're not saying that.
Yeah,
okay,
no,
just confirm.
Exactly.
But I love that idea.
Yep. We got to figure out what's going on within 2 time frames, time period. I want to know what happens within the next hour, for example, or the next 2 hours, and then another one. What's happened the next day, or what's happened maybe within 4 hours? I'll leave that up to you, but we got to start to fine-tune where those problems might be. And then I'd say get back to journaling and realize that not everything's going to be the next NVIDIA because, your results speak for themselves. 40 have been wins, 5 are open, but 2 you did close, but you closed them for wrong reasons. Those other 3, they're still working for you. So, and look at them as not as losing trades like you presented to us, but more of annoyances. Chezz, did I get everything?
Yeah, I think you nailed it. This has been an awesome comeback podcast. I don't know how Alex feels.
I feel neutral. I feel Iron Condor.
Well said. That actually makes sense to anybody that understands advanced options. So, we're over an hour. Do you have any final words? We'll obviously have you back because this is a good time and we won't wait 2 years. So for you listeners out there, well, what's going to happen? Well, I don't know. This is real time, but I think that if you do these steps here, Alex, things will start to...
I need to borrow Chezz's time machine again, except this time go in the forward and see where I am.
It's all about the journey, my friend.
Yeah, exactly. All about the journey. So, Alex, thank you for hanging out with us. It's actually an evening while we're recording this, so thank you hanging out tonight. And you will be willing to come back again, right?
Yes, absolutely. And I look forward to seeing, at least you, Clay, in Fort Lauderdale coming up.
I'll be there.
Chezz will be there. Chezz will be there. So,
you can look forward to meeting me, too, okay?
That is true.
I promise. I'll be nicer than Clay.
That's right.
Clay's the abusive one, remember?
Exactly. And I look forward to making fun of you in Florida. But, we will be... The 6th meet and greet will be down in Florida, and this should air before we get down there. So, Alex,
yeah, definitely.
We will see you down there for sure, and thank you again for hanging out with us tonight. A final few things before we go for you listeners. First, if you are listening on the YouTube channel, click that like button. Make sure to check out the remainder of the channel. Lots of other good videos and content there, from live trades to quick tip videos to other podcasts. And hopefully you ultimately decide to subscribe. If you're listening on iTunes or any of the other podcast players, make sure to subscribe, especially on iTunes. If you could leave us a rating, that really helps Chezz and I out quite a bit. And finally, if you're listening on the website itself, click that share button and leave us a comment down below. We read those and we will reply to them. So it's a very quick and efficient way to communicate with us. So thank you again to Alex. Thank you again to Chezz, our esteemed co-host. And most importantly, thank you to you listeners out there. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.